All right, today, unfortunately, I lost $654.73, but I'm up in one of my accounts by over 13% for the year. So, what does this mean? Well, this is day 14 of the US Investing Championship, and if you're new to the channel, so you know what? Let me just jump right in. Why am I not like devastated that I lost money today? Well, because my account overall, I have a realized profit of over $3,000 in just 21 days, basically January 1, 2026 to January 22, 2026. This is part of the US Investing Championship. And in one of my accounts, right, the main account, I am up 13.57% for the year, considering that there are only 22 days, right now so far. And compared to the S&P 500, S&P 500 is only up 1.19%. So, yes, I am beating the S&P 500, so that's great. That's why I am not really worried. Losing is part of winning. This is the nature of the beast. This is the nature of stock and options trading. And so far, as I recorded this video, all of my option plays, this is a not an option play and this not an option play, but the rest are option plays. They're all up, right? So I'm happy with that. So if you're new to the channel, this is series of videos is about my journey in hopefully winning or at least placing in the top 10 hopefully in the 2026 US Investing Championship. And by documenting my journey, I hold myself accountable, number one. Number two, I share with you my wins, my losses, and what I'm learning in the process. My ultimate goal on a personal level is I want to teach my kids how to trade stocks and options. I have a liver disease, so unfortunately, I might have a few years left to live. I don't know. I am working towards it. But whatever happens, I want to be sure that my kids will have you know, will have means to provide for themselves. And by teaching them how to trade stocks and options, then that will be a way for them to survive and even thrive, right? So that they don't make the same mistakes that I make. And today I made so many mistakes again, right? So, but this is part of the US Investing Championship, and I am very transparent. I share with you my account size, what's happening, what I'm trading, and so on. All right. So, and by doing that, number three, hopefully you guys can also learn in the process and help you with your stock and options trading. All right. So, in this video, you are going to learn how to make 20% profit with options in just a few days. And I'm going to show you, actual examples. All right. So, but before that, here's a quick update. So I do two things. So I have a smaller account, which is, as of today, around 3,500 with and some change. That's the size of the account. In the US Investing Championship, by the way, so I joined the $20,000 account size enhanced division, so I can use stocks and options. And one of the strategies that I came up with is doing day trading on basically penny stocks, right? But unfortunately today I fumbled through a trade three times. It was so frustrating, and when I sold too late. Okay, so yeah, so that happened with XSXTP. Okay, so I first bought it at 407. But really, fumble number one was I was trying to chase the stock. Okay, and I should have waited for the pullback. I did not, and in fact, it went down. Right, there was a pullback, and I lost money in here. Right, um, but had I waited, well, I had to sell. I have to follow my stop loss, so I had to sell. So I got stop out here. I will not discuss the other trades. They're minor in comparison. But IOTR, I entered it. I should not. I mean, on hindsight, I should not have entered it. Same thing with CMCT. But anyway, let's focus on SXTP. So this is fumble number one, right? And then fumble number two is that I should have entered sooner, and I'll show you the chart later, but I did not. So I was kind of like gun shy or kind of afraid, you know. So, but had I pulled the trigger sooner, I would have made money, you know. Well, I still made money overall, but I could have made literally like $100 plus, maybe even $150, which is huge for a account size of only 3,500. So, you know, yeah. And then when I sold too late because I was thinking, oh, you know what, it will probably still go up, you know. So I did sell half of the position when you know, when the profit reached like 15%. But then I realized on hindsight, you know, I should have sold even sooner than that. Uh, uh, Probably sold the entire account because I was at one point up by over $100, which again doesn't sound like a lot, but on the 3,500 account, I mean, you know, that's pretty good actually. So, but it is why it is, right? You know, so here's the chart where I fumbled through it like at least three times, and then I sold too late. So one, you know, I tried to chase the stock. I should have waited for a pullback, which it happened right here, right? And then I drew this line and this line, this trend line, because I noticed like you can connect these two lines here. I mean these two bar chart or bars here plus here and here. So I thought, you know what, if the price reach this point, you know, then I would buy, right? But the price went up too fast, so I was thinking, oh, you know what, maybe it will pull down, but I waited too long, and then it went up, and then it went up. So I lost out here, right? I could have bought literally right here, but I did not. And then the third fumble was so I drew a box, you know, because I noticed that the price was consolidating. So I said, you know what, if the price exceeds this point, then I will buy. But guess what? I did not buy again. So, and then I decided, you know what? Once the price hits one of the indicators that we use, then I will buy, and I did. So it went up all the way to 862. I did not sell, but then, you know, it went all the way down, and I sold, right? So I should have sold sooner, because had I done that, I would have made, as I said, probably even $150, to be honest, right? But it is what it is, okay? Actually, yeah, I would have made $150 just from this position, just on this stock, and then by the time you deduct the losses on the other two stocks, then I would have netted like $100. So, you know, don't think that it's a small amount, you know. So again, $100 over 3,500, making that in one day, that's pretty good. I mean, the most that I've made on that account, again, granted, it's a small account, in one day is over $500, right? So, you know, day trading can be lucrative, right? But what I really like, to be honest, is options trading. And today, my account that I use for options, I also use it, you know, to buy SPXL, which is a leverage play on the SPY, and SGov, you know, which is basically US, short-term US Treasuries, to get a little bit of income, you know, while I'm looking for a trade, right? So, but to make the long story short, on SPXL, I lost $322 there. One of the option plays, it hit my stop loss. So I sold that again. I was just following my plan. AG, I rolled that option and made $129 while collecting $159 in credit. And as of today, it went up even more, which is crazy. I, you know, old habits die hard. I sold a call option on MSDU at $10, but decided, you know what, the price is increasing. Why did I sell a call, right? When the price of a stock is increasing, I mean, you can sell a call, but but you will miss out on the gain. So I bought it back for a $28 loss, and then I did sell a call, but it was an out of the money call. It's not really following, like what I'm going to teach you, which is you buy an 80 delta call. But to make the long story short, I decided, you know what, yeah, that was a mistake as well. So I exited that. I exited out of the trade. So as you can see here, like it's okay if you make a mistake, don't be prideful, just get out of the trade, right? And lower your losses, right? Because if you trade long enough, But if your losses are controlled and a lot smaller than your wins, then overall you are winning, right? So with that, the wins for today on options, I followed my plan. I sold out of MP, which I rolled a couple of times. So I need to calculate whether overall I'm in profit there, or it's a losing trade. But but yeah. So but today, technically on paper, I lost money there, but I have to cut my losses short because it hit my stop loss, right? So I followed my plan, which is great. So it's still considered a win. Whenever you follow your plan, your trading plan, then it's a win, right? And then I rolled AG, one of the tickers from $19 to $20, which is in fact the ticker that I will talk about when I talk about, how to make 20+% in a few days. Okay. So, and in fact, as you can see here, AG, I rolled it to $20, and even today, I'm already up 26%, which is crazy. $330 in profit. Like literally, I could have rolled again, or I could just sell out of the position, but the stock is still rising. So, and then I found a new option trade, which is IAG. And then I cut my losses short on SPXL, which, it's not here already, but I did discuss that, in the trading record, in the other slide. So, and in day trading, I kept my losses small. So my losses are basically under $30, which is great. Again, for a $3,500 account, right? And then, I could have made $150 on that one trade, but, I fumbled the trade three times and, lost out, like, because I sold too late. So part of trading, guys, is the whole psychology, right? So, I realized that I need to have more courage in putting the trade, right? So, I should have acted like, when I drew this line, there's a trend line in there, and it's at the bottom of this red bar here, the intersection. That could have been a good buy point, but I did not buy as soon as I could, So I was like thinking, you know what, maybe it will go down. So in trading, whether stocks or options, there's always a balance between fear and greed. So I was like, the fear kind of overpowered the grid there, so I did not move fast enough, right? And then same thing here, that the price consolidated in here, and I said, you know what, I'll buy in the breakout, but I did not. I was waiting for a pullback, but so I bought when the one of the indicators got hit, and then I sold too late because of greed. On the other hand, right? So yeah, so once you're in one, again, on a small account, $3,500 account, if you're already $100 in profit or 15%, which is based on my trading plan and based on, the back testing that I've done, taking a 15% stop loss and 15% profit, take profit, right? Um, it's okay to just sell out of the position, especially if the chart is not going anywhere, right? But I could have done that, but again, I did not, right? But it is what it is. But at least on this ticker SXDP, it's still profitable, tiny profit, but it is what it is. All right. So now, how do you make 20% profit in a few days? Well, the answer is through buying calls. Buying calls are great, when the stock market is going up. Because, why should you buy calls? Well, one, you're able to control 100 shares of stock with a lot less money, right? So, for example, yeah, in fact, we'll go through this example real quick here. So on AG, First Majestic Silver, ticker symbol AG. All right. So I bought it. I bought the call for 420. That's $4.20 per contract, right? Or $420. That allows me to control 100 shares of stock, right? Whereas, had I bought 100 shares of stock, right, at 24.07, which I think at this time the stock was only like $22, right? So, you know, that would have been $2,200, right? Actually, it's less than that. I think $21. So whatever the case is, you get the idea, right? So with only $420, I was able to control 100 shares of stock, right? Through buying the $18 call expiring on February 20, 2026. Okay? Whereas had I bought the stock I would have shelled out $2,100, right? So what I did was, I bought three of those long calls, right? I could have spent $6,300, right? But instead, I spent 420 times three, that will be $1,260, right? So let's go back here. Why buy calls, right? You get the idea. You get leverage by buying calls. All right. You're able to control 100 shares with a lot less money. And when you have leverage, right? If you are correct in a direction, then you get multiplied returns. That's why today, as I've shown you guys here, today, just today, I already made 26% return after rolling the call already. Then from the time that I rolled the call today, this morning, it went up again by 26%, which is crazy, right? Whereas, the stock itself, in 1 week, it went up by 24%, but with my long call, it went up by 26% in 1 day, right? So I got more than 1 week's worth of gain in just 1 day. Think about that, right? Now, and then lastly, if you buy a call, the nice thing is, right, your loss is limited, right? Although the downside is, you you can lose 100% of your principal, right? 100% of what you invested in. I guess technically with stocks that's also the same, right? In theory, the stock can go to zero, but a long call, right, can go to zero long before the stock goes to zero, okay? Because it loses its value at expiry if it's not in the money, meaning, the price of the stock, let's say the price of the stock is less than the price of the call, the strike price, right? Plus the premium, then guess what? You will lose money, 100%, right? But for me, if done right, again, you get the leverage and therefore you get the magnified returns, right? So, when do you buy calls? Well, you buy calls when the market is in an uptrend, what I call stage two, and I'll show you later what that means. And then you choose the hottest sector in that market, and then you choose the best stock in that sector. So, for example, what is stage two? What does that mean? Well, any stock, right, goes through this four different cycles or four different stages. So one, you have consolidation, and then two, right, stage two is you have this big uptrend, right? This is where you want to buy stocks, and this is when you want to buy calls, okay? And then the stock will go through this topping pattern, is called stage three, and then it's followed by a crash, which is stage four. This is when you do not want to buy a call. Okay, don't buy calls here, don't buy calls here, right? Do not buy calls here either. This is the perfect time to buy calls when the market is in an uptrend, which right now, as I record this video, the market is in an uptrend. That's why it makes sense to buy a call in this market. And then what I did was I chose the hottest sector in this market. And right now, as I record this video, the hottest sector is materials. And part of the material sector is gold and silver. And gold and silver already went up, right? Now, I know what you're thinking. The shouldn't we buy low and sell high? Well, the problem with buying low and selling high is that you don't know how low you can go, right? Whereas if you buy high and sell higher, right, then you are riding on the trend, right? You're not swimming against the tide, you are rising with the tide, right? So we are basically, it's like surfing, right? You are surfing when the tide is going up, right? You don't surf and the tide is going like there's no tide, right? So that's what I do, and that's how you can make a lot of money using options, right? You ride the trend. Okay, so hot market, within the market you look for the hottest sector, right? And then within the hottest sector, which again is materials right now, which is gold and silver, and then within that sector you choose the best stocks, right? So, and one of the best stocks that I've found based on my research is First Majestic Silver. And when I bought it, So it was at $21, I believe, and I bought the $18 call expiring in February 2026. I bought three of them at $4.20 or $420 each because again with options, we use a batch of 100, right? And then I actually rolled it like after 4 days. Look at this. After 4 days, this is already in profit, right? So look at this. This call went up to 493. That's $73 per contract, and I have three contracts, so that's a profit of $210, right? But instead of being out of the trade and being satisfied with just $210, what I did was I rolled the call to the $19 strike price, right? I paid $430 for that call, right? And then today I rolled it. See today, January 22, I rolled it again, for $4.73. Remember, I bought it for $4.30, right? So that's a $43 in profit per contract times three. That's why I got $129 in profit. And I rolled it again to the $20 strike price, and total credit that I received was $159. That's, the cash coming out, cash going into my account. And out of that $159 in credit, $129 of that is pure profit, right? So, did I discuss when to buy calls? Yep. And then lastly, how do you buy calls, right? Use the 80 delta. So you're in the money, right? You're not gambling, right? When you buy a call, which is out of the money, that's kind of like gambling, right? But if you buy a call that is 80 delta, you're buying a call, it is as if you're buying the stock, right? But again, at a significantly lower price. I choose a 21 DT or longer, meaning 21 days to expire or longer. I avoid earnings and ex dividend dates because at those times, right? The price of the stock can crash or it can skyrocket. It's a binary event. We don't know what will happen. And then in ex-dividend dates, the price of the stock usually goes down by the amount of the dividend that they distribute. So it's like you gotta avoid those two dates, right? And then, as I said, roll the option once the option, the delta goes up to 85, or you already have a 10% plus profit, preferably 15% profit or above. In this case, I rolled the option and pocketed a quick 10%, right? And then it went up again, and now it's up 26%. It's crazy, right? I could have waited to roll it when it's already up, but by at that time, like 46%, but it's okay, right? So if this is helpful, like this video and subscribe if you want to follow my US investing championship journey so that you don't miss out any video, right? And if you want to learn more about why 90% of traders lose 90% of their account, click on this next video and I will see you there.